Ladies and gentlemen, let us all together wrap up our morning session with the third panel discussion, proudly brought to you by DD-CAP Group on Islamic finance as a force for sustainability, driving climate impact through VBI. Ladies and gentlemen, here is something to ponder. Can Islamic finance truly drive sustainability? Let us join the panelists in this session to explore how value-based intermediation, VBI, champions climate action, social impact, and sustainable growth through real-world projects and ethical investments. Joining us today, please welcome our discussants on the stage, Yang Mulia Raja Amir Shah Raja Azwa, Chief Executive Officer, HSBC Amanah Malaysia Berhad, Dr. Rifki Ismail, Director of the Islamic Economics and Finance Department, Bank Indonesia, and Mr. Lawrence Oliver, Executive Director and Deputy Chief Executive Officer, DD-CAP Group. Moderator for this session is Yang Berbahagia Tan Sri Abdul Wahid Omar, Chairman of WWF Malaysia. Yang Berbahagia Tan Sri, the stage is now yours.
Thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon. Thank you to AIBIM and the organizers for inviting me and the panelists here to deal with this issue on Islamic finance as a force for sustainability and driving climate impact through value-based intermediation. I'm here in my capacity as the chair of WWF in Malaysia. We are a 280 people-strong organization in Peninsular Malaysia, Sabah and Sarawak, looking at the conservation here in Malaysia. And we're also part of the international WWF network, or Worldwide Fund for Nature network, operating across 100 countries around the world. Well, across the world, there is an urgent call for finance to step up as a driver of climate action, social inclusion, and sustainable economic growth. Islamic finance, with its values-based foundation, is uniquely positioned to meet this goal. Malaysia, through value-based intermediation, or VBI, has been at the forefront of embedding sustainability into banking practices. But this conversation is not about Malaysia alone. Around the world, from Indonesia's pioneering green Sukuk to the UK's ethical investment platforms, we see how Islamic finance can evolve into a global force for sustainability. Now, to guide us through this discussion, we are joined by an exceptional panel of leaders. We have Yang Mulia Raja Amir Raja Azwa, who's the CEO of HSBC Amanah, and who's chairman of the AIBIM's VBI community of practitioners, and who has been instrumental in shaping Malaysia's VBI journey. Next to him, in the middle there, we have Dr. Rifki Ismail, who's the Director of Islamic Economics and Finance Department at Bank Indonesia, the central bank, bringing valuable insights from Indonesia's green Sukuk and sustainable finance initiatives. Dr. Rifki is also an adjunct professor at INSEAD University. And third, we have Mr. Lawrence Oliver, who's the Executive Director and Deputy CEO of DD-CAP Group in the UK, offering perspectives on connecting Islamic finance with international ethical capital markets. And until recently, I was chairman of Bursa Malaysia, and I would regard DD-CAP as one of the competitors to Bursa Suk Al Sila too. But today, we are friends on the panel. Well, together, they will help us explore how Islamic finance can move from compliance to real impact, financing climate solutions, advancing social equity, and to drive economic prosperity. So I'd like to begin our conversation in two parts. I think, first of all, we will have the discussion among the panel members here. I'd like to offer each one some questions for them to answer. We'll spend about half an hour or so. Thereafter, I would like to open the floor to questions from the audience here. So I do hope that the Slido will be featured afterwards for you to then ask questions. And after that, we'll give the opportunity to the panelists to offer their final remarks later. So we do hope to conclude in about 1 hour which is the time given to us today, slightly less compared to what was originally given. So with that, let me perhaps start closer to home, Raja Amir, if I may. As the CEO of HSBC Amanah and chair of the VBI, Community of Practitioners, can you share with us how are Islamic banks in Malaysia promoting VBI as a true catalyst for climate action? Thank you.
Thank you, Tan Sri. Bismillahirrahmanirrahim. Assalamualaikum, and good morning to everybody. So I think just from the last session, I think Dr. El-Ghari, he said it well in terms of the growth of Islamic finance. For the past 50 years, it's mainly rather been focused on compliance in creating a halal industry, which is something which is admirable. But I think the next challenge moving forward really is about how do we come back to the core, which is the Maqasid al-Sharia. So I think just to kind of walk through the history of value-based intermediation and how Islamic banks are gearing up for the efforts under VBI. So firstly, in 2017, Bank Negara, via its paper, came up with a strategy for Islamic banks to set out their vision for Islamic banking institutions. And value-based intermediation is rooted deeply in Maqasid. So again, moving from just Sharia compliance to how do we achieve the true purpose and the intent of the Maqasid al-Sharia. And the three components of VBI is, what are the offerings and the market segments? What are the products that we can show and offer to society which meets their basic as well as their elevated needs? The second is, what are the impacts that we can show from these activities? How do we assess them? How do we come up with a framework which meticulously looks into the impacts that we derive? And thirdly is collaboration. How do we partner with strategic partners in order to be able to provide an all-encompassing solution to the market? So how have we as a community of practitioners operationalized this? So starting in 2017, there were 5 Islamic banks, which were the founding members of the COP. And in 2017, that grew to nine Islamic banks, which formed the initial stage. Now today, 2025, we have 18 members, AIBIM members, who have signed up to be the COP members. And via this community of practitioners, it's a peer-to-peer platform where we discuss and where we compare, what are the things that we are doing. So what some of the key milestones from the VBI COP is the sectoral guides that has come out. So there's been 10 sectoral guides looking at everything from oil and gas to mining and manufacturing, various work streams which have done, which aims to come up with a impact assessment framework. So what do banks look at when they look at credit? They look at what are the obligations of the clients, but the VBI AF intends to look beyond that. What is the impact? What is the more minutiae that we should be looking into when granting financing to these various sectors? So today there's been 10 sectoral guides which have been created, and whilst they do align with the climate risk stress testing, which has been expounded by Bank Negara, as well as the climate change and principle-based taxonomy, they go further in depth. And on the disclosure side of things, so it's very important, whilst we do these things, we need to make sure that the market knows what we're doing. On the disclosure side of things, there have been 4 VBI annual reports that have been published. The most recent being 2023, for the financial year 2023, which was published in 2024. And in that report, we can see that value-based financing has grown significantly since it was first implemented in 2017. So in 2024, we recorded that VBI intermediation had grown to 217 billion. And that was, a growth of almost 147%. So that's really just to come back. How does this reconcile with, specifically with climate related? Within the context of value-based intermediation, there are specific call-outs in terms of what is the financing that Islamic banks are granting by way of social financing, by way of triple bottom line SDG financing, and the numbers have been growing staggeringly. So by reporting on these initiatives, by tracking these initiatives, we aim to show that Islamic banks are going over and beyond what traditional banks are doing. Now, what is the way forward? Because we always need to have a sort of a check as to where we are going. So moving forward for the Islamic banking industry, we want to push the boundaries further. Who are the kind of clients that we are financing? What are the initiatives that we are doing? What are the products that we can scale up further to ensure essentially nobody is left behind? So the VBI COP in 2025 will be working on product innovation. How do we scale up some of these products that we have already created? How do we collaborate with partners, with universities, with various other partners to be able to scale up these product offerings? We also want to look at disclosure. How can we better put into our annual reports what we do? What is the measure that we are using to show this impact? And essentially, what is the capacity building that we can do? How can we further collaborate with other partners to make value-based intermediation something which is a global standard and practiced by all?
Thank you, Raja Amir. Now, very, very heartening to know that VBI is actually progressing very well and playing a significant part in financing climate. But if I may just ask, in terms of the penetration, you mentioned about 270 billion as at the 2024. What is the addressable penetration? If there are no constraints in 5 years' time, do you expect that to grow to $500 billion or to $1 trillion, for example? And what percentage for the total financing system?
So when we look at what is the addressable wallet, I think the question is what can this, when we look at the breakdown of this 217 billion ringgit, which was intermediation, value-based intermediation, this comprises of the largest component is deposits, is VBI deposits and investment accounts, which is 58% of that 217 billion. The second largest component is VBI financing, which is a third, about 37%. And thirdly is our VBI investments, which is your Sukuk accounts and so on, which is about 5.3%. So if I just focus directly on the financing, which is about 80 billion in 2023, this represents something like 13% of the total financing granted by Islamic banks. So if we want to talk about scaling up further, I think it's almost 10 times. We can actually scale this up further, because VBI financing only represents 13% at the moment. We should be looking towards pushing social, environmental, governance-based financing to at least a third. I mean, we're going from just 13% to a third, and then growing further from there.
Great. So the growth potential is actually certainly great. Thank you. Well, can we now turn to Dr. Rifki Ismail? Now, Dr. Rifki, if I may, from Indonesia's perspective, how can Islamic finance accelerate sustainable development in a rapidly growing market? We know that Indonesia is actually the largest Muslim country, the largest economy in Southeast Asia. Certainly, there's a lot of perspective that we can learn from Indonesia. Thank you.
Thank you, Tan Sri. Assalamualaikum warahmatullahi wabarakatuh. Before I share you about Islamic finance responses with regard to the sustainable finance, let me also introduce you how Indonesia responds to the sustainable economic growth. Yeah, nationally, we have had national economic policies which integrate central banks, Ministry of Finance, National Deposit Institution, and then Indonesian OJK to have similar policies with respond to climate change and sustainable economic policies. For Bank Indonesia itself, based on what do we call might be omnibus law for finance issued 2023, the mandate of central bank is added now to not only stabilizing then what do we call rupiah or national currency, stabilizing the financial system and stabilizing the payment system. We also have another mandate, which is to support sustainable economic growth. So the new mandate from the Indonesia omnibus law. And then by having this new mandate, Bank Indonesia added some policies with response to sustainable economic policies. In our macroprudential policies, we have FTV, financial to value ratio, which is for Islamic banking. We also have a ratio for financial intermediation. We also have incentive for macroprudential liquidity ratio. So how does it work? So basically, and then I'm now coming to the Islamic banking. Yeah, we have macroprudential incentive instrument. How does it work? Yeah, we apply similar incentive for both conventional and Islamic. For example, under financial intermediation ratio, if Islamic banks dedicate some of its financing to the green finance, to the green property financing, to the green like transportation financing, they will get incentive. What is the incentive? Incentives comes from lowering the reserve requirement by the central bank. Yeah. Besides macroprudential, we also have what do we call central bank Sukuk, or we call it Sukuk. It was issued 2018, and then the underlying is the government sovereign Sukuk. If the government sovereign Sukuk is green, automatically central bank Sukuk or Sukuk is also green, because we are applying retrenchment mechanism by using musyarakah muntahiyah bitamlik contract. So this Sukuk has been amounting 80 trillion rupiah, or nearly 8 billion US dollar right now. Those are the second, at least, among many initiatives taken by Bank Indonesia. And then beside central bank Sukuk, we also have government Sukuk, as you mentioned, sovereign green Sukuk. The government has issued this green Sukuk since 2018, has been 10 billion US dollar right now. And the money or liquidity coming from this green Sukuk has been using to finance a lot of SDG project, watering, and then green transportation, and then energy, renewable energy, many projects done by the government with this green Sukuk. Last but not least is the for social, as we have discussed about this since morning, the role of social finance. I believe all of you are very familiar with cash awqaf link Sukuk, the Indonesian initiative awarded by ISDB as the most impactful Sukuk, awarded 2023. So we have launched a cash awqaf link Sukuk, in which the government issued Sukuk with awqaf contract. Investor, anybody, individual investor, institution investor can purchase this government Sukuk under awqaf, and the proceed is used for social project. So this cash awqaf link Sukuk has been awarded by IDB 2023. Besides this one, even last 2 years, we have also issued another cash awqaf. We call cash awqaf link deposit, in which depositors can just come normally to Islamic banks, deposit their money in Islamic banks, but they said, anything coming from my deposit, I mean return, margin, or anything, profit, or anything, I will use it, I will dedicate this for awqaf. I'm not gonna take it, pay it for awqaf institution, use it for awqaf for social project. That is called cash awqaf link deposit. Yeah, those are a mix of initiative to support for sustainable finance and social finance altogether.
Thank you, Dr. Rifki. If I may ask a follow-up question on that, what's been the take-up for that awqaf-linked deposit, if I may?
What do you mean? What?
The size of the deposit.
Oh, the size. Still very small compared with the cash awqaf link Sukuk. Cash awqaf link Sukuk has been amounting 1 trillion rupiah, or nearly 100 million US dollar. Has been huge. Alhamdulillah. To be honest, cash awqaf link Sukuk was format was constructed by 4 persons. I'm one of them, between Bank Indonesia and Minister of Finance. But for cash awqaf link deposit, it was initiation from the industry. I think just million or billion of rupiah only, not very much, because it was just launched 2 or 3 years ago.
Yeah, it's a good start, inshallah. Well, we now move on to the other several more developed market in the UK. Lawrence, from a global market perspective, how can international players like DDCAP support the mainstreaming of sustainability in Islamic finance? Thank you.
Thank you very much, and thank you to the organisers for giving me this opportunity today. I'm very proud to be here. I think it's important that we acknowledge from the start that the success, or the considerable success, that we've witnessed through initiatives such as the VBI initiative here in Malaysia hasn't necessarily been repeated outside of Malaysia particularly, and Southeast Asia. At the moment, fortunately, we're starting to see global recognition on a larger scale of various different sustainability-linked projects. I think we can see that through events such as the recent COP summits, where fortunately we've seen Islamic and sustainable finance nexus has moved from what was previously just a sideline event onto the main agenda. So clearly this is a positive sign that I think globally institutions are starting to recognize the opportunities that exist and what needs to be done to gain a far better and stronger sustainable market on a global basis. I think the key to that is top-down support. I think we've seen the Malaysian market, just from a pure Islamic finance perspective, the phenomenal support that's come from Bank Negara from the outset has been instrumental in actually driving the growth of Islamic finance here in Malaysia. And I think in any jurisdiction globally, without that top-down support, you're not going to receive or have any opportunity to achieve the success that you strive for. And Malaysia is a fine example of just how important that is, I think, to the development moving forward. I think what hasn't helped recently, we've seen obviously with political changes in certain jurisdictions in the Western markets, perhaps the emphasis on sustainable ESG type projects has been moved onto other project types at the moment. So I think as an intermediary in the international global markets, what we've witnessed in recent years has been, in the last couple of years, perhaps a slight slowdown in the number of sustainable and ESG supported initiatives that institutions are undertaking. But I don't think we should be deterred from that. I think it's just a momentary situation that we're going through. We see in this part of the world the enormous focus on that area of business. And I think we're seeing initiatives now starting to come back to the fore throughout the GCC markets that we operate in. We've seen a number of the GCC countries that are signing up to various different forms of sustainable policy guidelines, etc., which is positive. That needs to continue to evolve. I think we're also seeing certain new opportunities that are coming through from certain of the growth corridors that are growing now. Those are creating a number of opportunities, both in terms of investment flows and also for job creation. And I think moving forward, those corridors are going to be vitally important to the success of, or the further enhanced success of this industrial space. If we look in the last year, I think if we look at in 2024, green and sustainable Sukuk issuance reached $15.2 billion. And that equates to 6.2% of the total Sukuk issuance globally. So clearly there's opportunities there, huge opportunity to do a lot more. I think as a company, DDCAP ourselves, we're very focused on the whole sustainable space. We have a lot of initiatives internally that we follow. We have external advisors. Mr. Dal Vikri is here today, who does an awful lot of advisory work for us around our sustainability model that we adopt within the company. All of the commodities that we transact in, we put through quite considerable screening to ensure they meet certain criteria that we set for ourselves. But also our own carbon footprint as a company is very closely policed and looked at. We have a company called Plan A, which is an independent company that we adopt every year to come in and review basically everything that we do as a company in terms of who are our third-party providers that we use for things like cleaning, for things like electricity supply, etc. All of them have to be sustainable for us to employ them in the first place. And then we look at things like travel. How do our own staff come to and fro the office every day? So we record that. We look at ways in which we can reduce considerably our own sort of long-haul travel. So for example, where we're establishing, and we've recently changed the status of our own office here in Malaysia to a regional branch status now, which we're very proud of. But that enables us to ensure we've got ground people here to reduce the requirement for us to travel as frequently on long-haul flights, etc. So all of this goes towards contributing to our global footprint. So these are initiatives that we're undertaking on a company level to try and ensure we meet the goals that we set for ourselves. But in turn, what we're seeing is that starting to now be recognized by a number of the major law firms that we work with, who will look at us whenever they're working on a sustainable or a ESG-focused product. And hopefully it positions us in a stronger position in terms of being the supplier of choice for that particular project because of the sustainable goals that we set for ourselves internally. So I think that the message to put across in this sort of opening comment is that there's plenty that's being done, particularly here, that's all extremely positive, but there's far more that can be done. And we've just got to look at ways in which we can further evolve that and support that.
Well, thanks, Lawrence. Obviously, DDCAP is having significant impact at the global level. But if I may ask, this is not on the list of questions that we give you. I'm just keen to understand what's the prospects of Islamic finance within the UK itself, where you're based. So I'm just wondering whether the size is sizable enough for other players to come and operate in the UK itself. Thank you.
It's a good question. If I'm going to be totally honest, the Islamic marketplace in London or in the UK remains very small. I think the biggest problem we have, and I talked earlier about top-down support, the problem we have in the UK is that frequently in recent times we've seen changes of guard at the top. Both obviously the political party changed, but then also internally at government level. What you do need in order to be successful is you need a champion in the government to support the initiative. And what we've tend to find in recent times is that you get somebody appointed that's going to be effectively the supporter of the Islamic Finance Initiative across the country. And then very quickly they change and they suddenly move to another department, and then you literally are back to square one, and that can be extremely frustrating at times. I think we see too much of that at UK level. So the Islamic finance industry in the UK remains relatively small, but the players in the market are very committed to its success. They're very keen to see it become more and more successful. I mean, unfortunately, I think we now only have one really purely retail-focused institution in the UK, which is Al Rayyan Bank, and they're supported by the Qataris. And they've done a fantastic job, and they've been there for, as an institution, the institution through various ownerships has been there for probably 20 plus years now. And you've got to admire the perseverance that they've shown, but it's a difficult market, it's a challenging market. I think ultimately, to be honest, if I was to sum it up, it remains a relatively skeptical market. The retail investors are skeptical, and more can and should be done to try and develop further growth in that space for sure.
Well, thanks, Lawrence, for offering that perspective. Now, it's interesting in the sense that notwithstanding the small domestic market, you're able to serve the broader market globally. And I think early on, we had the benefit of Mr. Mustafa Adil presenting the LSCG report. So again, you have another UK-based entity, but providing that global service internationally. So imagine what it could do for places like Malaysia, where we are ranked number 1 in terms of the development of Islamic Finance Index for the past 13 years. So I think certainly there's a room for the ecosystem to serve that market even better in the future. Now, the next round, I would like to actually talk about the issue of compliance and how Islamic finance can be positioned as a force for climate action. But before that, I just wanted to go back to some of the comments made by the earlier panel. Dr. Ashraf had mentioned about the needs for principles-based Shariah governance and so on. And I think before that, we also had some conversation about how we can actually address the issue of social justice. One of the issues which we've been having in the past is how can there be social justice when at times the people who are marginalized, the poor people, they actually charge a much higher cost of financing for the same purpose compared to the richer ones. So for example, we have this concept of risk-based pricing, where if you're buying a house, you're from low income buying a 200,000 ringgit house, for example, you may end up paying higher cost financing compared to someone who's buying a 1 million ringgit property. So at the very least, one would have thought that the pricing should at least be equitable. So I think this is where we do hope that when it comes to Islamic finance and even conventional finance, we should promote the concept of not only risk-based pricing, but also purpose-based pricing, which I hope can be actually looked at in the future. Thank you, Governor, for being here this afternoon. Now, back to our session today. Well, if I may throw the question to all three of you, beyond compliance, how can Islamic finance be positioned as a force for climate action and sustainability that delivers positive outcome? So maybe I'll start with Raja Amir.
Yeah, I think in terms of, I mean, Islamic finance ultimately looks at the maqasid al-Sharia. It's looking beyond just the compliance. So I think I mean, when we travel the world, when we talk about Islamic finance, when we actually do Islamic financing transactions, you can see that the discourse is really around, I mean, the kind of synergies that Islamic finance brings to the table. It is beyond just making a product Sharia compliant. It is actually your duty as a Muslim, as in a financial institution, to ensure that the money that you are deploying is going to a worthy cause. And how is that demonstrated? I mean, ultimately, that's a big word, but how do you actually demonstrate that? And I think the numbers speak for itself. And sorry, I need to quote the numbers because the devil is in the detail some of the time. And when we talk about that growth of the Islamic VBI industry, so we talked about that 217 billion number in 2023. Now let's break it down in terms of the financing. So the financing that came down from that 217 billion was 80 billion for social as well as net zero. So that's 80 billion ringgit, 37% out of that 217 billion. And when we break that down further, out of this VBI financing, 80 billion, 67% went to social financing and 33% went to net zero financing. So which shows that, I mean, Islamic banks are deploying, although they arguably may have been later to the ESG game, but, ultimately Islamic banking was already an exclusion sector before ESG. They are deploying their balance sheets towards activities which are climate related. But not only are we looking at climate related, we're also looking at social justice. And these are, if I can just cite a number of products that has come from this journey of value-based intermediation. Without this journey, I'm not sure that Islamic banks would have actually put in the effort and the time to create these products. And when we say creating products, we also need to be conscious of the fact that product creation needs to go through a very rigorous business committee. People need to see that these are viable products before you offer them to the market. So we may have pet projects that we want to do, but so long as they don't have a business case, it's not going to get across the line. So just to cite a number of products, and there's a lot of Islamic banks in the room today, and all of them have their own innovative products, but I'll just cite a few. So for example, Bank Islam has an impact investment account called Ihsan Sustainability Investment Account. So this investment account, again, we talked about risk sharing. This investment account doesn't guarantee your return. It really depends on the underlying portfolio. And out of that, it will be channeled towards activities which comply with SDG, climate-based taxonomy, and so on. And there's also a social impact contribution of 2.5% from the returns from that particular account. Secondly, Maybank Islam has come out with an Ikhwan MasterCard Platinum Credit Card I. Again, you need to ask these people whether these products are successful, but the product is on the shelf. And particularly, this card will tell you how much carbon you are emitting, and it will invite you to reduce that carbon by making a contribution to something which is decarbonizing. And then another product is an Alliance Islamic Bank has a microfinance program, a Zakat microfinance program. And this is also done by Bank Muamalat. I see KK is over there. Bank Muamalat has also done a double mudarabah product whereby they look to use their iTekad funds to provide grants. So we talk about just now, you were talking about risk-based pricing or purpose-based pricing. Ultimately, banks are governed by Basel III. For every risky product that we put aside, we're going to have to put RWAs aside. We can't run away from it. So that's why there is ways to utilize other sources of funds, i.e. the zakat that we contribute either at a bank level or from the employees ourselves via the zakat wakalah, and taking this off balance sheet, putting it via the iTekad program, providing entrepreneurs which would otherwise probably not been able to receive any financing. We provide them via the iTekad program, and this is then match funded by state religious authorities or we partner with educational institutions to provide entrepreneurs an education on how to do financial planning, bookkeeping, and so on. So this is some of the activities which are being done by Islamic banks. If we look at the component of social financing, it's 0.11% out of that 217 billion. So there is room to grow. That is the lowest component. But in the past, since 2017, it has grown, in excess of 100%. So I think that there is room to originate more climate-related financing. At HSBC Amanah ourselves, the value-based intermediation journey has prompted us to come up with our own triple bottom line framework. We report against this framework. We get validation from external authorities. And the businesses are also pushed to originate more sustainable transactions, which will be booked under the Islamic balance sheet. So I think what has been done so far has been commendable, but there is room to do more.
Thank you, Raja Amir. It's interesting that you mentioned that out of that 80 billion financing, VBI-based financing, less than 20% is actually for climate financing for now. But I think this is where the prospects are actually great in the sense that if you look at our country mission's commitment to be net zero by 2050, the big part of that will be to decarbonize the energy sector. And under the National Energy Transition Roadmap, the government has identified 1.2 to 1.3 trillion ringgit of financing or investments required to achieve that net zero. And a big part of that is about increasing the proportion of renewable energy to 70% by 2050. I think the target today is 30% immediately. So again, if you're talking about 1.2 trillion of potential investments, and a big part of that will be on adaptation and mitigation. So therefore, I would say that the prospects for VBI will be much greater for the future. Can I then move next to Dr. Rifki,
Thank
please?
you. Thank you, Tan Sri. While trying to answer your question, let me extend my information with regard to Indonesian omnibus law. As I mentioned before, currently, based on that omnibus law, there's some innovation legally to allow more benefits of Islamic banking for social and for sustainable financing development. Yeah. Firstly, under that act or under that law, Islamic banks are now allowed to be nadir. Previously, they're only collecting awqaf. But right now, they are not only collecting, but they are now becoming or they are conducting as the nadir, awqaf manager. They're doing social project. They're financing the social project. That's the new law. And then, what is the potential of awqaf? There are 80 trillion rupiah cash awqaf in Indonesia. And then there are 80 trillion means perhaps 8 billion. 8 billion US dollar cash awqaf, and then around 2,000 trillion rupiah for the potential of land or non-cash awqaf, or nearly 200 billion US dollar. But those are not well employed. That's why when this law allows Islamic bank to be not only collector but also the manager, hopefully we can extend more benefit of Islamic banking to the society, not only for commercial purposes but also for social one. Yeah, the one that I mentioned before, cash awqaf link sukuk, the proceed is used for health sector, for eye center. So the duafa, the mustahik, whenever they had problem with the eyes, they just come to the eye center and got all of the medical treatment for free. It is financed by this cash awqaf. Yeah? And then secondly, this law allows Islamic bank to perform Sharia restricted investment fund, Sharia. I believe all of you are familiar with this one, right? But in fact, the normal deposit that we have now, that's why mentioned by Sheikh Ali Al-Ghari, when Islamic bank propose or offers normal deposit, I don't want to say it normal means the same as the conventional. There are some differences in Islamic deposit with comparison with the conventional, but some of the might be scholar or public, they tend to pretend that the normal Islamic deposit is not very much different as the conventional one. But this Sharia restricted investment account is using Mudharabah Muqayyadah contract, which is very difficult to be implemented nowadays. But then, based on this law, we are enforced, quote unquote, to execute, to realize this Sharia restricted investment account. And just last week, there was an announcement from Bank Muamalat Indonesia. They have announced Sharia project for social, for Awqaf. Can you imagine? This difficult deposit contract is now used for Awqaf project, just recently announced by the Bank Muamalat Indonesia. And then the other, mandate from this law is to, I don't know, a bit challenging. This law allows Indonesia or Islamic Finance Indonesia to apply Islamic derivative. Islamic derivative. In fact, our National Sharia Board, I'm part of the National Sharia Board member in Indonesia. We are strictly prohibiting derivative under Islamic. But then this law allows us, can you think some contract which are still complying with Sharia with regard to derivative? Wow, it's a bit difficult right now, but we are now still doing some assessment, especially referring to our colleagues from the Middle East or from Malaysia, with there's some effort to assess some of the potential contract in Islamic, which is considered to be derivative, but not derivative as per the conventional one, but as per the Islamic Sharia compliance one. Then hopefully we can also adopt that one. That's another mandate from the law. And then the last one, not there are a lot of mandates from the law, is to have Islamic promissory notes for Islamic money market. We have adopted this one. We have issued our law, central bank regulation and OJK regulation to allow Islamic bank to issue Islamic promissory notes. So hopefully these are a combination of effort to give benefits for Islamic bank, not only for commercial, but also for social, including for sustainable finance. Because these mandates from the law is not only for normal Islamic financing, but also for sustainable financing.
Thank you, Doctor. Well, with what you have mentioned just now, I have no doubt that the penetration rate of Islamic banking in Indonesia will actually grow tremendously over the next few years. Very encouraging indeed.
Inshallah. One more thing, if I'm allowed. As compared with the Malaysia, our Islamic banking share is still around 7-point-something%. Yeah, much lower than Malaysia. Malaysia is tremendously increasing very fast. Yeah, but one of our homeworks as well is because in Indonesia, especially in central bank, we apply integration between monetary policy and money market developing, money market deepening policy. Whenever monetary policy is implemented, it is inherently or it is in line with the deepening money market. So how do we do this? We apply a primary dealer among banks. But unfortunately, this mechanism is only applying to conventional one. We haven't implemented this for Islamic bank. Because as you know, I believe you are very familiar with the Indonesian market. We have only one big Islamic bank right now in Indonesia. Hopefully this year, we are waiting for another 3 Islamic banking windows to be spin off, to be a full Islamic bank. So inshallah, end of the year, we are going to be 4 big Islamic banks. And then we can apply the primary dealer under Islamic mechanism.
Very encouraging.
Hopefully, we will go tremendously, inshallah.
Thank you, all the best. Lawrence?
Thank you. Well, I think my fellow panelists have said a lot, but I think there's 2 key points that I'd like to just make on top of what they've been saying. The first one is in terms of driving Islamic finance forward and demonstrating the benefits it can deliver. The first key point that we should all be focused on is education. Because I do believe that, everybody gathered here today, we're all in the very privileged position of having a sound, strong knowledge of exactly what benefits Islamic finance can deliver to the marketplace. I think I'd be right in saying there's a huge amount of the conventional markets that really do not appreciate and understand what those synergies are that Islamic finance can offer when working in the sustainable finance industry, because the synergies are significant. And I think, therefore, what we need to focus on moving forward is ensuring that if there are conventional institutions out there that are looking at ways in which they can benefit from a Sharia-compliant financing for their sustainable projects and ESG-focused projects, the only way we're going to be able to bring them on side is by giving them the right levels of education. So we need to focus on how can we improve the quality of education for these institutions so that they can get a greater understanding of the benefits that can be derived from the introduction of Islamic finance. It brings in huge extra capacity for them. And I think a lot of institutions at the moment are blissfully unaware of that because they consider Islamic finance as being a complicated method of finance, etc. I think all of us that are involved nowadays in the industry realize that might have been the case a long time ago, but it really isn't the case now. And it's an alternative means of finance that can work very nicely alongside conventional offerings to bring far more capacity, capability to institutions. I think the other point I'd just make in terms of moving forward and what else can we deliver, ESG disclosure and transparency is going to be another key component. I think at the moment, we continue to see too much of a risk of greenwashing taking place. And the only way that we can possibly tackle that is by introducing greater levels of disclosure and transparency so that we can put in place clear reporting requirements which will in turn provide greater clarity around the use of the proceeds by the institutions, because we do know that the Sharia scholars are very keen to ensure that they're fully aware, and rightly so, of what are the proceeds being utilised for. So therefore, a greater level of clarity being provided will certainly support and enhance the growth of this sector of the industry. And on top of that, perhaps the way to ensure that's guided and overseen more stringently is perhaps the introduction of higher levels of penalty if those various different criteria are not being met. So there's a lot to think about, but I think it comes down to education and also looking at what more we can do to enhance our current offerings.
Higher penalty, meaning that we have both carrot and stick. Yeah, some industry players already complain that the fines can be too prohibitive, I must say. Anyway, okay, we have very limited time left, but I do want to offer the floor to for questions from the floor, please. And so early on, any questions on Slido? It's none. Anyone, any live questions here? Sorry. Is there someone? Sorry, I can't see. Okay, screen, okay. Okay, well, maybe we can take this question from David. What are the biggest operational and regulatory hurdles Islamic financial institutions face in fully integrating VBI and sustainability into their core strategies? Maybe this will be for Raja Amir.
Okay, my board is over here, so they probably can also chime in if needed in terms of strategy-wise. But I think, I mean, my challenges may be difficult from other banks, specifically for an international Islamic bank with a group reporting to the global side. Sometimes they do ask, what is this value-based intermediation that you are doing? How does it differentiate from ESG? Ultimately, you know, I guess the concern is about complying with a framework which is not, you know, internationally acceptable. So when you want to operationalize something which is loosely defined, i.e. there's an international value-based organization, there's no specific framework which tells you exactly, you know, what is VBI, what qualifies as VBI, what are the exclusion criteria, you know, the different colors of green, shades, and so on. Then it becomes different to sell this to a global audience where there's no defined terminology. So that is the first thing. But it's acceptable that this is something which is driven locally, so they accept it as a local endeavor. But when it comes down to the selling it to the people on the ground, i.e. when you are telling the relationship managers, when you are telling the product owners, I need a product which is going to be able to satisfy not just profitability and returns. I need something which is going to benefit humanity. Those are some. I mean, those are the kind of questions that you'll get weird looks lah. When you say those kind of things. So ultimately, I think from an international organization, embedding it slightly into the core strategy, i.e., the direction and the moral compass of the organization, has its challenges, but one which we have managed to navigate, I would say, but one which we need to continually remind, the organization that we are signing up to something which is not just about profitability. It's also about doing better for society at large.
Thank you, Raja Amir. The next question is quite interesting from Billionaire International. How can VBI principles apply to tokenized gold-backed microfinance products to strengthen financial inclusion and resilience against economic shocks? Anyone would like to take this? I'm not sure, Lawrence?
Thank you. Yeah, I think it's it's interesting. We're increasingly being asked to look at the opportunity to involve token-backed various different initiatives, including gold-backed microfinance products. I think what's important to note, though, is that yes, it can help strengthen the financial inclusion market space, but I do think the resilience against economic shocks is not something that by just tokenizing it, you're going to be able to overcome that. That risk will always be there. I think we've seen this year in the commodity markets, particularly through the summer, across all commodity types, not just the metals industries that we particularly focus on, but across all areas, regardless of whether it's a tokenized asset or just a regular everyday asset, effectively, market movements will impact availability and price, etc. We saw the impact of the threatened tariffs from the US on the commodity space significantly in the summer. Throughout July, it had an incredibly negative impact on availability of commodities across all asset types throughout the summer months. It quickly came back to something more like stability, but I think the point here is just by the use of a tokened asset doesn't necessarily mean that you're protected from what are economic impacts that aren't going to be protected in any way if something as substantial as that takes place.
Thanks, Lawrence, for that. As I look at the room here, I see some reps from Bursa Malaysia. I think 2 years ago, Bursa Malaysia launched the Bursa Gold Dinner. One of the incentives for that, apart from making investment in gold more accessible and backed by efficient system and real gold in vault, it's also about the next step where perhaps providing that social finance financing or enabling social finance financing using the Bursa Gold Dinars as the primary asset. So I think that's something which perhaps will be coming in the future. So I'm mindful of the time. So perhaps we can actually come to the closing round. I would like each panelist to offer their thoughts on what is the most urgent step that we can have to make Islamic finance a real force for sustainability. So basically, your final thoughts for this session. I'm going to do the reverse. Lawrence, Dr. Rifki, and then Raja Amir.
Thank you very much. Well, I think I'll come back to what I've alluded to earlier. The keys, I think, moving forward now to make Islamic finance far more of a force is going to be educating the market as to the advantages that Islamic finance can bring. I think looking at what the current offerings are and the ways in which we can further improve from a reporting and also from a transparency perspective. If we can achieve that, I think there is clearly a sign that in the industry now, despite the temporary lull, shall we say, that we've seen, particularly outside of this region, in focus on these projects, I think there's a huge amount of investment seeking these type of opportunities. And I think if we can ensure that the industry is aware of the benefits that can be derived from utilizing Islamic finance products to meet that criteria, I think the road ahead looks very positive.
Thanks, Lawrence. Dr. Rifki?
Yeah, thank you, Tan Sri. First is legal enforcement. If there is no legal enforcement, it might be very difficult for us to implement that one. Secondly, a good response or responses from the regulators, Islamic finance regulators. Thirdly, of course, commitment from the players. And then last but not the least is to engage or to integrate social finance in Islamic commercial finance. We cannot segregate between social and commercial because like what we have been talking so far, social is a complementary for us to strengthen function of Islamic finance, Islamic banking, to give more benefit for the Ummah. Thank you.
Thank you, Dr. Rifki. Raja Amir?
Yeah, so this is a call to action and a reminder to myself ultimately to that, and back to the question again, to institutionalize as well as embed VBI principles within the culture and operations of Islamic financial institutions, despite the challenges that we may face. And we need to be committed and focused on delivering tangible, measurable, and systemic positive impact on the communities as well as the environments that we serve. So I think just back to the point about addressing the needs of society, we need to be able to translate the intervention that we do as a financial institution to those who really need it, and we need to back that up with a measurable method in how we measure the actual impacts of the financing that we are providing, and then see that on a year-by-year basis. Thank you.
Well, thank you, Raja Amir. Well, ladies and gentlemen, what we've heard today is clear that Islamic finance can no longer be defined by compliance, and it must become a catalyst for climate action too, as well as social equity and sustainable economic growth. Our panelists have shown us that through frameworks like VBI, initiative tools like Green Sukuk, international market linkages, and global policy alignment, Islamic finance can take its rightful place as a force for sustainability at the world stage. And as we look ahead, the urgent call is for scale, for alignment, and for measurable impact. And with combined strength of industry, regulators, international partners, and communities, Islamic finance can deliver on its promise to create value not only for investors, but for society and the planet. Now, speaking of the planet, I think it's important for us to relate to what we're doing in the Islamic finance world to what's actually happening on the ground here. So if I may have my slide, please. So I mentioned earlier that Malaysia has already committed to be net zero by 2050. Could you please? Thank you. Next slide, please. Well, Malaysia has indeed committed to be net zero by 2050, and that means that from where we are today, where we have a net greenhouse gas emissions of 115.4 million tons of carbon dioxide, so that the number will have to be brought down to zero by 2050. In order to address that, we have to address both the emissions as well as protecting our carbon sink. Now, as you know, more than 70% of our greenhouse gas emissions are actually contributed by the energy and transportation sector. And that's why the government has placed a lot of emphasis on the National Energy Transition Roadmap. Now, the other one that we must do critically is to protect the 18.2 million hectares of forest that we still have here in Malaysia, because that's able to sequester some 249 million tons of carbon dioxide equivalent on an annual basis. So if we lose that, we will lose that capacity to absorb that 249 million tons of carbon. So it is important for all of us to do what we can to support that net zero. And I just wanted to show this video of wildlife. So when you have nature, you protect wildlife, you have an ecosystem that's there for the future generation. This was last year, August, September, when we visited the Tabin Wildlife Reserve. And then we went to Danum Valley, where we were able to actually witness some wildlife. And this is orangutan at Danum Valley, showing a female orangutan with her baby. And we are fortunate to also see at 4:15 a.m. in the morning. This is actually on the way to the airport from Borneo Rainforest Resort in Danung Valley to Tawau Airport. This is Banting, the junior cousin, I would say, of the Malayan Gau of Seladang. Reason why I'm showing this is to really encourage all of you to do your part to protect our forests and to conserve our biodiversity. For that to happen, I do hope that each one of us will do our part to do so. It's important for all of us to comprehend the issue so that when we understand what's at stake, we then understand what are the steps to be taken to actually reduce our greenhouse emissions and protect the planet. So as a start, start separating your waste, composting your food waste, start to reduce your consumption. For the many people here who are into fast fashion, it's okay to actually to look at pre-loved materials and so on, so that we can actually reduce the impact on the environment. For those of us who are using electricity, please minimize them. If you have properties, landed properties, do consider installing solar panels on your rooftop. They're not only good for the environment, but they also provide good returns, easily more than 20% return on your investment. And of course, if you can't use public transport, you still have to drive. Do consider switching to EVs, if I may. So with that, again, I thank you for your attention. Sorry for a bit of this speech for nature, because at the end of the day, we do have to ensure that the humans can continue to work with nature for the greater good of our future generation. So with that, a big round of applause to our three panelists here. Thank you. Wish you all the best.